Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today I'm talking with my friend and colleague Christopher Aaron, founder of iGold Advisor and Elite Private Placements, and also senior editor at the Gold Eagle website. And Christopher, it's always great to get you on the show to get your technical take on the precious metals sector. We've got a chart of gold up here, and as far as gold, it's had one heck of a run really for the last year and a half, but it has had a little bit of a roller coaster ride ever since we saw Liberation Day, the sell off in a lot of the markets, and now gold has clawed its way back higher over the last month or so. People are worried that it's stalling out or that maybe it's going to double top. So the question is, Christopher, is this the end of the ride in gold? Is it going to get stuck channeling here? Is there risk of a downturn? How are you looking at the chart?
Yes, Shad, thank you so much for having me on the show. Hello to all the listeners. Here we're looking at gold over the last several months. We're looking at the spot chart of gold as priced in US dollars. I have just drawn in the all-time high, which was set back in April, $3,500.10 exactly. Um, Shad, what I have been doing for almost 20 years, what I do obsessively, even in my free time, what I do for my business is I analyze price charts, specifically with respect to the precious metals as a focus, but I do look at other markets. And what I will tell you is when we're looking at the gold price right here, last several months, even though it's had a good run, as you said, since the breakout last year, gold's higher by over $1,000. Even though that is the case, when we look at the shorter term price action over here, I will tell you this does not look like a top. Um, a top pattern in gold would have a series of peaks that are kind of rounding up and then rounding back over. That's not what we're seeing here on gold. What we're seeing is more of a rounded bottom here with these peaks that were these troughs that were coming down and now they're coming back up. And we can see basically a resistance zone kind of coming in here. So let's call it 3,400 to 3,500 as our resistance zone. And when you know it, as we are speaking right now, we are talking on a Thursday afternoon. So this is getting into Friday morning in Hong Kong. Gold is up and it's probing this resistance zone. So if we look at this and we talk about one attempt, two attempts, three attempts, this is the fourth attempt now at this zone between 3,400 and 3,500. I know some people might say, well, that's kind of a wide resistance zone. It's really not in percentage terms. You think about that, it's only just, a couple percentage points here. Um, this does not look like a top. This looks like a classic continuation pattern. We could call this a complex inverse head and shoulders pattern, more of a cup shaped consolidation. This does not look like a top pattern. This looks like a continuation pattern to me as someone who obsessively studies price charts. And so, if that is the case, what I'm expecting here for gold is I don't expect it to make new all time highs today or tomorrow, even this week. I think it's probably going to probe here into the mid 3,400s, probably back off maybe $100, $120, maybe back to the low 3,300s as we get into late June, mid July. I think the breakout to new all time highs for gold will be coming anywhere in that window of mid July to kind of late August. For some reason, the market has the gold market, if we remember past cycles, has a tendency, if we want to talk about the breakout to gold above 1,000, that happened early September. Something back in 2009. There's something about this market. It could be the having to do with the buying that comes out of India during the wedding season, some of the holiday seasons that come up in China into the second half of the year. It looks to me like the chart is shaping up for a breakout as we get into the later part of the third quarter.
Yeah, and I think if you look at a lot of 30-year and 40-year seasonality charts, you also see that really that August, September timeframe is when there's really strong months for the gold and gold stocks just seasonally. So we'll look for that late summer, early fall breakout in gold. But that begs the question, what about the gold stocks? And so with the gold stocks, we'll take a look at GDX, but it's interesting with the gold stocks, a lot of them are starting to like price in the higher margins. You're starting to see the bigger, you know, cash flow and revenues from the producers. But some of the developers still haven't really got off the mat yet, and a lot of the juniors are just now starting to move. You've got a great chart here of GDX. So walk us through what you're looking here and maybe where we're at in the cycle of the gold equities.
Yeah, I mean, this is really a thing of beauty, this chart that we're looking at right here. This is a 5-year chart of the GDX. This is the senior large cap gold miners. There's about 20% exposure in the GDX to silver. So the direction that the GDX moves is going to be representative of silver also, but there's often a lag for silver. Coming back to the GDX, look at the beauty of this. You know, remember, we were just looking at basically this same cup type of pattern when we were looking at the short-term chart for gold, and I was saying, you know, we're getting into the fourth test of a fairly flat resistance level for gold itself. I said it doesn't look like a top for gold. That was the short term for gold. This is basically the same cup type of pattern here that formed for the large cap gold miners, just on a much longer time basis. This was like a 5-year consolidation from the peak in 2020 to the breakout that just happened here in April. And the attempt at the breakout that the GDX made first here, right before the legitimate breakout, first got rejected. That happened on the panic of the Trump, the Trump panic sort of tariff episode that happened there in early April, and everything sold off. And so the GDX was trying to break out, had that one more steep sell off. And then look at this candlestick right here. You know, viewers may need to sort of zoom in or get close to the screen, but look where my mouse is right here. Notice this impulsive, bullish white candlestick right here, this engulfing candlestick. Incredible technical price action that we saw here, just enveloping the previous red candlestick. These are weekly candlesticks that we're looking at. This bullish engulfing candlestick is what we would call on that week following the Trump tariff panic. That constituted the breakout of this 5-year resistance zone. You can see it very clearly. And then notice several weeks more of continuation, moving higher up into this zone around 53 on the GDX. And then what? About 4 weeks to come back. Look at the retest. Look at the retest right here. Almost a picture perfect breakout, retest, and now what? We are making new highs on the GDX above the initial impulse. This is one of the most textbook perfect breakouts of a cup pattern that I could ask for, and it's happening across the large cap gold miners. And the phrase is, the bigger the base, the bigger the move to come. In the case of the GDX, we have a fairly accurate way of measuring. What I'm going to say is it's a first target. The first target for a cup consolidation such as this is derived from taking the widest part of the consolidation. In this case, the measurement is 24.25 points, 24 and a quarter points right here. And then we add that measurement onto the breakout point here. The breakout point was 45.75 exactly. And so for the GDX, we have an initial target. I would expect this target to be met within the next 6 to 18 months, depending on how bullish this market wants to be. We have an initial target of 70 on the GDX. Now, I will say that oftentimes what happens when a market will get into the vicinity of an official target, the other thing to remember about the GDX, I'm not going to pull up the super long-term chart, but the official target that I have here would represent a new all-time high for the GDX. The peak that was set, the former all-time high still goes back to 2011. The GDX has been lagging. The gold miners have been lagging the price of gold. In 2011, when gold peaked at 1900 per ounce, the GDX hit a level of 67. Okay. So the implied target here, which is my official expectation for the GDX, takes us to within 3 points, actually 3 points above the former all-time high. So from that point, I suspect that because it's going to match the official target and it's also going to match the 2011 peak within just a few points, I suspect there will be a pullback and need to be some consolidation. So, for example, that could coincide with, let's say, gold getting closer to 4,000, and maybe from that point, gold needs to correct and consolidate for a little while. I think that point between 67 and 70 on the GDX is going to be the next logical zone for investors to say, hey, is it time to take some profits off the table? We're not near there yet. I mean, we've just had a 5-year breakout. The other thing that I want to say is after a 5-year breakout, once the initial target is achieved and you get, let's say, that pullback and then you need a consolidation, this doesn't mean that this is the ultimate target, the final target. We take the market in chunks. We will evaluate that once we get up to 67 or 70. For now, I think the entire sector is moving higher over the next 6 to 18 months, and the evidence is right here for that.
Well, Christopher, just a couple of follow-up statements and comments here. One, the longer the base, the higher in space. So you've got that higher in space target, but I find it strange if you put your fundamental hat on for a second that we just now broke out of that cup, that 4.5 to 5 year cup, because gold prices are way higher. I mean, they're above 3,000 in the 3,300s. That other side of the cup was when gold got to 2089, and you just mentioned that back in time in the 2011 peak, when the GDX got to 67, that was when gold was at 1923. The margins now are the fattest they've ever been in the industry on a percentage term and even on a nominal term. Why is it taking so long for these gold stocks to break levels that were at much lower prices and much lower margins?
Yeah, the reason that I believe it's mostly due to sentiment in the sector. Um, the other chart that looks almost exactly like this, Shad, is the chart of silver. If you think about silver for a second mentally, and I'll bring up the chart for a second, but just to describe it, silver had a major move off the panic lows in 2020 and got up to $30 per ounce at the peak in 2020. Silver consolidated for not 5 years, but a little over 4 years before finally breaking above 30. And since then, so now if you think about it, silver, we're talking about today, silver at $36. It's just barely above its 2020 peak for silver, similar to the GDX. If you think about what both silver and the GDX represent, they both represent leveraged forms of gold, more speculative forms of gold. And I don't use the word speculative in any sort of derogatory sense, but what I mean is you don't have central banks around the world buying silver. Who buys silver? It's individual investors, it's hedge funds, it's family offices, right? Who buys physical gold? It's central banks, it's sovereign wealth funds, right? So both silver and the GDX serve as more speculative, leveraged forms of gold in the long run. In the long run. But when we think about silver, so let me actually bring up, and we'll come back to the GDX, but let me bring up the silver chart here so that investors can see the similarities here, what I'm talking about. Here's silver going back the last 5 years. So notice the similarities. We're just talking about the coronavirus panic and then how silver nearly tripled after the coronavirus low. It tripled in 4 months. And then from the $30 level, you'll notice there was basically this big cup pattern here, actually over a 4-year cup, and then some kind of flirting with breakouts, wasn't ready to sustain it. Really, finally only broke out here when we get into August, September of last year, and now and then it consolidated for a year. So remember the GDX chart that we were just looking at. GDX is just above its 2020 peak. Silver is basically just above its 2020 peak. I mean, in the big picture, $6 above the 2020 peak is not all that much. Now, the interesting thing is, I mean, I've been publishing at iGold for over 10 years. And before that, I was publishing to a private list for about 5 years before that. So I've been publishing for over 15 years, and I've been through the 2011 peak, which was a 9-year peak for the gold price. I also lived very much through this 2020 peak here. And I will tell you that right now, with silver, let's call it $6 above its 2020 peak, interest in silver is nowhere near what it was back here 5 years ago. And the reason for that is it's sort of a facet of human nature, and we have to understand it, and we have to use this facet of human nature to our advantage. Average Western investors are attracted to rapidly rising prices. So something like this, where silver bottomed at $11 per ounce, and then in 4 months, it tripled. Investors were stampeding over themselves to buy silver and silver-related stocks as silver was breaking out above 20 and into this peak around 30. I lived through it. I have all sorts of numbers. I have readership numbers. I have Google Trends to refer to. I have my own internal subscriber numbers. I'm telling you, investors were tripping over themselves to pile into the silver market back here. Silver is now $6 above where it was back here. And I'm telling you, the interest in the silver sector right now, silver miners, investing in silver, Google Trends, many different metrics that we can look at. The interest right now, with silver $6 higher than it was 5 years ago, is about 1/3 of the level across everything that I look at. Now, I can't speak for the bullion dealerships, but from the silver investment side, from the average Western investor, it's still about 2/3 lower than it was right here. And that is because you have to think about this. Average investors are not, momentum investors are not attracted to a market that just consolidates for 4 years, 5 years, and then does this kind of grind, bump, and grind, 2 steps forward, 1.5 steps back, 2 steps forward. They're not attracted to that kind of thing. And so that's why all of our metrics are showing that there's very little interest in this breakout in silver right now. And so I will come back to the GDX chart here for one moment, and I will say the same thing. The GDX went through the same kind of thing, and it's a in an ideal world, we would think that gold mining investors are able to be forward looking, and as gold was breaking out to new all-time highs, for example, in March of 2024, when gold was breaking above 2,000 per ounce, we would think that gold mining investors would be able to be forward thinking and think, hey, the margins of these gold producers are going to be really expanding here. Maybe we should price in the gold miners above, where they were when gold peaked a few years ago. But apparently, gold mining investors were not able to do that. But we're starting to see some of the senior large cap miners, when they release quarterly reports, Core Mining is a big one. Some of the other large cap miners are on the verge of breaking out. It looks like Newmont might have a run when it releases quarterly results. Agnico Eagle has already been really strong, but it looks like basically investors, because of the slow rise on the speculative side of things, are needing to see the proof in the quarterly reports, in the profit reports. And so, when we talk about GDX and silver, they are basically a reflection of one another as uh, the lagging part of this precious metals bull market, with physical gold taking the leadership role.
Well, Christopher, I'd love you to go back to the silver chart just briefly and maybe put your technical hat on as far as what kind of levels you think it could actually achieve. Because the reason I ask this is everybody knows that there's a lot of resistance at the 37, 38 area, which we've just bumped into last week. Silver shot up on the futures market to 37.03 and got swatted back down, but it is 6, $7 higher. If it gets through that, there's really not a lot of resistance up until you get to, I mean, there's a little bit at 42, but there's not a lot of resistance until you get to that classic all-time high of 49 to $50 that was tagged in 1980 and was also tagged in 2011. And you
Yep.
can see it there on the left-hand side of this chart, that 49 $50 level. So that's the marginal line in the sand as far as 50. Do you think that when silver approaches that and gets above this recent resistance, that people will start pricing in 50 and we'll see that rip higher in the equities and in silver? Or will it take breaking 50 to really get that going? And are we at risk of a smackdown at 50? So what's your outlook as far as the road to 50?
Yeah. So, by the way, let me zoom in on this time period here from the last break toward 50. Let's go back and rewind to 2010, 2011. I lived through this one very distinctly. And I want to remind investors that in August of here's that August time frame again, right, for a breakout in the precious metals. Um, in August of 2010, when silver was trading for 17 bucks and change per ounce, it broke out finally above 17, 18, 19, eventually 20. Silver did what it does. It tripled in 8 months. It went from 17 to 50 in 8 months. This is how silver can move. And this, now, the thing to remember is that, was this sustainable at the time? Was this tripling super dramatic? Fortunes were made, including myself making a small fortune back then, for myself at the time. Was this tripling in 8 months sustainable? Well, let's remember what happened after that, right? Over the next 5 years? No, it wasn't. It gave it all back and then came back down to 13 and change, right? Below that breakout point. So the what I'm trying to say here is, from a sustainability standpoint, we don't want silver tripling in a few months' time. Those types of moves tend to not be sustainable. Further, we look at what happened the last time that silver broke $35, where it is right now. Look at right here, Shad. It was in February of 2011. You see this right here? When silver broke 35. How many weeks was it from 35 to 50? 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. 9 weeks from 35 to 50. Touch of 50. 1, 2 weeks back down to 35. 9 weeks to get up, 2 weeks to give it all back from 35. So let's fast forward to the present. We've just had silver once again breaking above 35. And we talked about how the interest is, even now that it's $6 above where it was in 2020, is nowhere near the peak in 2020, because what? Silver tripled in 2020 in just 4 months, similar to this tripling right here in 8 months. And then what? It had to move sideways for 5 years after that. So what we want to see here, Shad, in the current cycle is actually a continuation of this kind of pattern, this stair-stepping pattern. Actually, it's been doing this here for like 3 years. You back to the low in 2022, you look at 2 steps forward, 1 3/4 step back, 2 steps forward, 1.5 steps back, 3 steps forward, 1.5, right? It's this kind of thing. And as I said, the sentiment right now, because it's been this back and forth, the sentiment is nowhere near where it was after a very rapid tripling in the price. Um, from here, I agree with you. There's especially if I do some trend analysis. This is what we do in our premium service. By the way, we look at where highs are matching up here. Notice, look how nice all these highs are matching up following the low in 2022. Look at this. These highs, these highs, these highs in 24, these highs, right? So clearly sellers for silver are emerging along some sort of a visible trend here. As you said, I mean, that you're exactly right. I don't know if you were looking at this trend. This is what I look at behind the scenes, but this chart I'm just annotating in real time. You're exactly right. Resistance comes in at here 38, 38.50 if it were to be hit right now, up toward $39 if we get, later on this summer. I think what silver is going to do is continue to grind its way toward the low 40s with very little fanfare. And then I think when we're getting into the first part of next year, from the low 40s, I mean, literally, we could have silver trading at 42, 43 on a Thursday afternoon, and you go away for a long weekend and you come back on Monday morning and silver is trading at 46, and then by Tuesday morning it's trading at 50. That's how the final parts of these waves tend to work. It could be literally a matter of days from the low 40s up to 50. But because it's taken this very different type of stair step pattern this time compared to what we talked about this time, where it tripled in 8 months. Yes, I suspect that when we get up to 50 here in the next 6 to 12 months, functionally speaking, could be 43, 45, 50. I suspect that when we get into the zone approaching 50, there will be some technical based traders who choose to smash silver back down or short silver outright or take their profits simply because it's going to represent, not just a 15-year peak, but as you said, this peak goes all the way back to 1980. I can't move this chart all the way back that far. So this is going to be a 45, 46-year peak when we get into 2026. I suspect there will be some traders who do shove it lower, could be from 50 back down to 45, 50 back down to 40. It sounds dramatic. It's not really that dramatic in percentage terms. But because this market has moved in this kind of chop and grind higher, here's where I think things are going to get very exciting over the course of the next 2 or so years. All of my data shows me that the average investor is nowhere near the silver market right now, even with silver at 36. I mean, maybe when we cross 40, there will start to be some interest. But if it keeps moving like this in this grind sort of pattern, I'm going to tell you what, Shad, I don't think the level of interest is going to reach anywhere near a level of enthusiasm like we saw back here until after silver breaks above $50 per ounce. And like I said, that could come after a sharp pullback. But I don't think the average Western investor is going to start paying attention to silver until after it breaks $50 per ounce. That could be 2026, 2027, somewhere in that range. And so I almost hope that this continues moving very slow and sort of under the radar, because we know what happens when silver spikes all of a sudden. Then it has to move sideways for 5 years, right? So if silver can move higher here toward 50 without attracting a whole lot of attention, I think the average Western investor will not start paying attention until you have your Barron's and Business Week and Yahoo Finance blasting silver new all-time high headlines, and that will be at 50, 51, 55. $60 per ounce. And from there, if that's when the average investor starts getting involved, Katie bar the door. Then we start talking about some of those triple digit conversations.
Yeah, so in many senses, it's like how people acted with gold when it finally got above 2,100. It finally was breaking out to new highs. The headlines began. Banks had to reissue their estimates for gold. And when gold kept blasting higher and higher, then the masses got involved. Plus, you had the extra element of central bank buying. But you really got in people's zeitgeist when you started seeing gold breaking out to new all-time highs and continuing to make new all-time highs. So maybe that same thing above silver when it gets above 50. But we have another chart here, Christopher, of the silver stocks. And so if you think silver is lagging and GDX is lagging, I think one of the sectors that's lagged the most is the silver equities. They're just now starting to wake up out of their slumber. And you've got a great chart here, which is a ratio chart of really silver miners to silver. Walk us through this chart and why it's just starting to wake up.
Guys, think about this for a second. Silver is at a 13-year high. It's just broken above 35. It's trending higher as we're speaking, but without a lot of interest. We know that the average Western investor is not really in this market. Yes, the silver bugs are in this market. Some of the gold bugs have bought a little bit of silver, but it's not anywhere near mainstream interest. What we're looking at right here is the ratio of the silver miners to their very own product that they produce. And this is the Senior Producing Silver Miners Fund, the SIL fund. This is a ratio chart. When this thing is moving higher, it tends to be when there's a lot of enthusiasm coming not just for silver itself, but for leveraged forms of silver, i.e., the silver miners. Look at this move here in the very beginning of 2016 when this ratio moved from just above 1 to just below 3. What that means is as the price of silver was rising and people were interested, the silver miners tripled the gain in silver itself. So silver itself rose 50%. The silver miners tripled that gain. So that was like a 4.5 X move in the average large cap silver miner. You know, that's like your Pan Americans, that's your Heclas, your cores. You want to talk about some of the small cap silver miners, a lot of them went 10x in this move in the first half of 2016. Now, most people were not prepared for this move. Look at what happened the same time after it bottomed here at this same level. What? Following the coronavirus panic. You had this 4-month move up here. A lot of the silver miners went up 5x in 4 months. We talked about that being a significant peak. Look at where we are right now. With silver at a 13-year high, for crying out loud, the level of interest is so low in the leveraged forms of silver that it's at the same level as it was at major bottoms. Chad. Major bottoms. So we're seeing, and by the way, let me come back to the gold chart because as we're speaking, gold's higher by another $10. Remember, I was saying about half an hour ago, this gold chart does not look like a top to me. We were talking about it looks like it's going to do one more probe into this resistance zone between 34 and 3,500. From there, I would expect sort of a shallow, maybe a little bit of a grinding bull flag, a little pullback back down to the 33s. But I'm telling you, this does not look like a top to me for the gold market. We're going to be talking about whether it's a few weeks from now, 1 or 2 months from now, August, September. We're going to be talking about gold making new all-time highs. What do we think is going to happen to silver as gold is making new all-time highs? It's probably going to be pushing 38.40 like we were talking about a moment ago. These silver miners are priced relative to silver at the same level as when silver was $14 or $11 per ounce. And that is because of the slow and grinding way that silver has moved higher. It is just all those momentum chasers that pile in when silver moves higher. They've gotten flushed out of this sector. I see this across every metric that I am following, both data-based chart evidence like this and my own internal statistics from having published for over 15 years. I see it everywhere. And this is a ratio chart between the silver miners and silver. This is a 9-year downward trend. It is bumping up against it as we speak. Gold will be making new all-time highs here on a highest probability within the coming months. Silver is going to follow. This thing is so ripe right now for the silver miners to have a move to at least the mid-range, matching the 2020 peak, if not the high range, matching the 2016 peak. And that's going to be a doubling or a tripling in the value of the large cap silver miners. And so, and then you'll take a multiple of that for the small cap silver miners, and it's right on the precipice of happening now. Um, from a contrarian standpoint, this is when you want to really be focusing on the undervalued parts of this sector. Yes, I think silver is undervalued relative to gold, but the silver miners on a 10-year basis are extremely undervalued relative even to physical silver itself.
And when you think about it, Christopher, there's already people on Twitter, X, and other social media platforms talking about ringing the register on the silver trade because some of these silver stocks have started to move. Some of them are up 1x, 2x, 3x in a short amount of time, even a few smaller ones up more than that. But in the overall scheme of things, this move is just getting started. So I guess one of the things is the tendency not to sell too early. And I think you've got one more chart that maybe we can get into really quickly that talks about the overall volume in the venture exchange and like just the overall enthusiasm we're starting to see start to swell for the small cap stocks. And so um, there's a lot of focus on small caps, on the juniors, and we're just now starting to see that in the volume in the TSXV, the venture exchange on the CNX,
Yeah.
CDNX. So I think you have a chart for that, right?
Yes. Yes, I do. And before I do that, I just want to go back to this GDX chart for 1 second and just say anyone who's saying this is the ring the cash register moment, look at the GDX. I mean, this is one of the most clear breakouts with a significantly higher target that is trending higher right now. It's nowhere near the target yet. This move is not over. Gold has not topped here. The level of interest in the sector is nowhere near where it was at previous peaks. Yes, some of the names have doubled and tripled off the lows, but remember those lows were historically undervalued relative to the product itself. Now we are looking at the entire history of the Canadian Venture Index, the CDNX. And for investors in the US or around the world saying, who cares about this Canadian exchange? You just have to remember that uh, somewhere around 80 to 85% of the world's gold and silver mining companies choose to register their companies in Canada because they have very favorable laws for mining companies there. Even if their operations are all outside of Canada, I know plenty of companies that never set foot in Canada for their operations, but they'll choose to register their companies in Canada because of the favorable, mining laws there. And so this index is made up of about 2/3 mining companies. Um, and so there's no perfect, we just looked at the GDX, which is the large cap gold miners. There's no perfect index to track the small cap or the micro cap, the development stage gold miners, because even the GDXJ or the GOEX, those are really mid-tier type funds. A lot of those companies in the GDXJ have billion plus dollar market caps. If you want to talk about the companies that are sitting on 1 million ounces of gold or 2 million ounces or 5 million that are trading for, 5, 10 $15 per ounce in the ground, absolutely ridiculously cheap valuations for proven gold in the ground, um, such as Bravada Gold or Spanish Mountain Gold, for example, two stocks that I own, um, that are in this Canadian Venture Index. You have to look at this index. You can't look at, even though the GDX is breaking out to new all-time highs. Excuse me, not new all-time highs, new 5-year highs. The all-time high still remains to be achieved. I think it's coming. Um, that GDX chart, however, will not give you the sense of where the small end of the spectrum is going to come, and it's the small end of the spectrum that eventually is going to have the largest gains, because when the enthusiasm really builds in this sector, it is much easier for a company with a market cap of, let's say, 5 million to go to 50 million than it is for a company with a market cap of 5 billion to go to 50 billion. It just takes a lot less buying pressure. And when enthusiasm comes in and the average person starts taking a look at this sector, they're going to gravitate toward a lot of the smaller names. Um, the smaller names have been lagging because they are part of this overall Canadian Venture Index. For example, you look at the 2020 or early 2021 peak right here on the Canadian Venture. Notice it's right around this 1100 level here. Index is not even back up to that. We just talked about how the GDX, the seniors, have finally just broken above their 2020 peak. The development stage companies are severely lagging. That said, if you're with me that gold has not topped yet and silver has not topped, and we're seeing the evidence for that in real time, you say, where is the value now? A handful or two of these senior gold miners, let's talk about, Wheaton Precious Metals, the streamer, Agnico Eagle, um, Anglo Gold out of South Africa. Some of these companies have had significant gains over the last couple of years. Not all of them, but some of them have. And I would argue with you, if you're going to be looking for value in the gold sector and looking for high reward to risk opportunities, you're not going to find that by chasing the couple handful of gold stocks that are already at new all-time highs. Yeah, you might make some percentage points on that, but you're also taking a lot of risk. But buying something that's already priced for close to where it should be at today's gold prices, you're taking a lot more risk that way. I would argue that these development stage gold miners here are priced more like gold is 1,300, 1,400 bucks. And so just for them to get revalued to where gold is today means a lot of these companies need to triple, quadruple, et cetera, off their lows. Very easy for companies to do that. When I was speaking at the Vancouver Resource Investment Conference this last January, I mentioned a little gold miner that I own shares in. For full disclosure, it's called Bravada Gold Corp. I mentioned it. It was trading at 1.5 cents. They've got 1 million ounces of gold measured and indicated in Nevada, United States. It was trading at 1.5 cents. Fast forward 4 more months after I mentioned it, it recently hit 6 cents per share. That's a quadrupling in 4 months. You're not going to have Barrick or Newmont quadrupling in 4 months. But with companies on this Canadian Venture Index, that is going to happen as that GDX is moving back to the target. You look at what's been going on here, a 12-year terminal wedge, major downward trend in the development stage companies, broke that, been moving sideways now for 12 years. The longer the base, the bigger the move. It looks like it's forming an inverse head and shoulders pattern, and that the right shoulder has already broken upward. I mentioned, companies like Bravada have quadrupled in the last 4 months. That's just from this little move right here in the red shading. Imagine when this thing gets back to just the 2020 peak. That's still about another 30% to go in the overall index. And I'll tell you what, I think this entire inverse head and shoulders, when we're looking forward the next 12 to 18 months, is eventually going to resolve to the upside. I don't necessarily think this index is going to go back to all-time highs immediately. I mean, it could eventually, but we will have a very nice measured target for these development stage companies. Again, this Canadian Venture Index is representative of about 85% of the small and the micro cap gold and silver companies. We will have eventually a measured target up here around 1800 when this breaks out. That could still be 2 or 3 years into the future if this breaks out. Even if it doesn't break out, even if it just gets back to the 2020 peak, you're going to have the wind at the back of a lot of these companies for the first time in about 4 years. And so for the investors who are looking for value now, I'm saying it's not in the large cap gold miners that are already at all-time highs. It's in these development stage companies if you have the proper risk tolerance. Because, if gold corrects a couple $100, yes, they can drop 20 or 30% in a couple of days, but the upside should more than compensate for that risk for these development stage companies over the next 12 to 18 months here.
Well, Christopher, I think we're going to wrap it up there for today because that's a great note to end it on as far as the look ahead to the small cap juniors, the micro cap juniors, and the moves that they have in front of them. We've already talked about the moves that GDX still has in front of it, the move that silver has in front of it, the move that SIL has in front of it for the silver equities. But some of these small junior developers really have the most potential upside. So it means the rest of the sector really hasn't even gotten in gear yet. And it's just exciting to think about this and what the next 18 months could look like in the sector. I really appreciate you coming on the KE report and sharing your technical prowess with us, diving into these charts together. And I think you made a great point that really the sentiment has been the drag, not so much the pricing levels. And once we see that sentiment kick in, it's going to happen suddenly, and it's going to probably surprise even the bulls in the precious metal space. So definitely appreciate you sharing your wisdom with us. If people listening in want to follow Christopher and his work, definitely click on the link below in the show notes. It takes you over to iGold Advisor, where you can look at not just his service where he talks about the stocks he's trading and the technicals, but also his elite private placement for those accredited investors or investors that like to get into financings with these nano cap stocks. He does a great job of filtering through the companies to find deals for his members. And I'll also put a link down below just to Gold Eagle so you can follow along with his writing because Christopher is the senior editor over at Gold Eagle and often has good articles. So, Christopher, thanks as always for coming on the KE report and looking forward to our next conversation.
Shad, thank you very much for having me back on. If you're a serious precious metals investor and you like the type of analysis that you've seen today, you have to understand the power of receiving regular technical analysis on the precious metals markets week in and week out, covering everything that you need to know as an investor. Our service, Precious Metals Intelligence Plus, features weekly premium member video updates, just like you've seen here today, but much more in depth. Every single week, we cover not only the long-term, but also the short-term perspectives for physical gold, physical silver, the entire gold and silver mining sector, as well as the stock market, the currency markets, and Bitcoin, because everything is related. You have to be an aware investor to know what is happening in other aspects of these markets. Not only do you receive the premium video updates, but you will receive flash updates directly to your email inbox the moment that we make a buy or sell decision, or the moment that something impacts the precious metals that you need to be aware of. All of this is included in Precious Metals Intelligence Plus. Click on our homepage to learn more about subscribing today. If you're a higher net worth investor, you have to understand the power of private placements. In our service called Elite Private Placements, we invest in the same companies that we are investing in here, gold and silver mining companies for Precious Metals Intelligence Plus. However, the difference is that in elite private placements, we get even better terms on the investments because I negotiate terms directly with the mining companies. In addition to negotiating the terms, we also receive free, yes, free warrants on every single investment that we make. And the warrants give us nearly twice as much upside for investing in the exact same gold and silver mining companies as here. It's just that they give us the warrants for free. And so we get that additional upside because we are higher net worth investors and we are helping these companies to literally finance their operations going forward. So check out Elite Private Placements. Remember, you will receive a free subscription to our flagship research service, PMI Plus, if you join us in the Elite service. If you would like to sit down with myself, Christopher Aaron, and speak one-on-one, either on the phone, on Skype, or in person if you're in my area, you can book a consultation on the website of our homepage. And I am not paid 1 single cent by any of the mining companies or any of the bullion dealerships. I am 100% independent. And so in our consultations, I'm able to sit down and assess your entire situation and tell you exactly what I would do if I was in your situation. And this comes from a researched and independent perspective. Once again, someone who is 100% focused on assisting individual investors. So I hope you will take the information you've seen today, think about what is coming for the precious metals markets, and join us.